Hello, everybody, and welcome into VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. We are, of course, bringing the VRIC to you each and every week. Today, we have another wonderful guest lined up for you today. He is a professor of applied economics at Johns Hopkins and a former member of President Reagan's Council of Economic Advisors, among many other accolades. It is Mr. Steve Hanke. Great to have you back on VRIC Media.
Great to be with you, Jesse.
I want to kick things off with the gold market here. You've been bullish in all our previous conversations. Gold obviously soaring after being in a consolidation pattern for approximately 4 months, breaking out a parabolic move. A lot of people were thinking that it moved too far, too fast, and indeed we have now seen a fairly significant correction as we now sit around $4,000. It was a big one-day correction, I believe. Friday, Monday, it dropped even more this week. I know you have your own instrument to track sentiment in the gold space. What is that telling you? Is sentiment still bearish at present? Is this a time to be buying the dip? What are your thoughts?
Yeah, well, the maybe not quite yet. First of all, let me indicate that about actually on September 21st, I was the first time publicly I said that I thought the bull secular market, or I should say secular bull market in gold, would peak out at $6,000 an ounce, and it really took off right after that statement. Now I know correlation does not imply causation, but it did seem to be correlated. So to give myself a shout out on that. So I haven't changed my view at all. And a lot of people say, well, how do you come up with that number? And if you look at past bull markets in gold, particularly focusing on the 1980 bull market, it peaked out at around 10%, the price of gold about 10% of disposable personal income in the United States. So that's the back of the envelope kind of calculation. And now you have Goldman and all kinds of other banks coming up with other scenarios and other ways to come up with a peak number, and those seem to be coming in around 5,000, something like that. So the question is, well, now we've had a big correction. I'd say a maxi correction. We're now on, we're talking, what are we, the 22nd today?
Yeah.
So, or 22nd of October today, just for the record. And gold is now trading, it's a little bit over 4,000. Let's see, what is it? I'm just looking up. As I speak to you, it's 4,050. So it's pulled back from the highs, but this gets into, well, is this a buying opportunity? Well, the big pullback, it is a buying opportunity, but when? And right now, I look at the Hanke Kaufman's gold sentiment score, and the way we get those sentiment scores, Jesse, we text mine the articles that are coming out on gold every hour and determine whether those articles are bullish or bearish, and then develop a score based on those text mining measurements. So it's very high frequency data. It's hourly data. And what you find now, just looking at the readings this morning, Eastern Standard Time, the range goes from minus 10, that's the most bearish reading. That would be very extreme, which you never get there, but you potentially could get there. Or a maximum bullish position would be plus 10. And we're getting readings now. The 9 o'clock reading was minus 2.6, then 9:30 it was minus about 1.17, and then it went positive. Actually, at 10 it was actually positive 0.326, and then it goes negative again at 10:30, minus 3.7, and then 11 at minus not quite as much, 2.1, and 11:30 I was the last reading I was obtained. It's about -1. So it's that's telling you it's consolidating, but kind of in it with a little bit of a bearish tone. It's not reaching an extreme, and an extreme. The buy is when it does reach the extreme on the bearish side. You know that a reversal is coming, and so I would say it's if we reach -4, -5 in that zone, something like that, I'd certainly want to be buying, because a reversal always occurs at these extreme points. So right now I'd say the market is still consolidating, and with a bearish tone, shall we say, but we'll just wait and see. Keep watching those measurements. That's why the Hanke Gold Sentiment Score is so important. It's important for high frequency trading and that kind of thing. But positioning and getting into a market, if I conclude that the secular bull is all intact, there's really no problem, and we're going to 6,000, and we've had this huge pullback. Well, the question is, well, when do you buy? How do you optimize your strategy for buying? And you do it with this high frequency Hanke Gold Sentiment Score. And it looks to me like right now we haven't reached an extreme oversold position and bearishness position. And so I'd just be sitting on the sideline waiting a little bit.
And in terms of the gold mining sector, is that an area that you're watching as present? Because obviously it put in an incredibly strong performance so far year to date. At the moment, the GDX ETF is up a little over 100% so far this year. That's after the big sell-off event for the metals and related miners. What are your current thoughts on the gold mining space? And I guess a similar question to the last one. Is this a buy the dip moment for the miners, or would you be watching that same sentiment indicator in regards to an entry point for the miners as well?
Well, point number one, Jesse, I'm not watching the miners that carefully. I mean, I have mining friends that own the mines literally that I talk to, but I'm not trading the mining stocks, and they will obviously be following whatever is going on in the bullion market, and the expectations about the bullion market. Not only the spot, but also the expectations about where the market's going. But I don't have anything very constructive to say about mining. It's although it's gold, it's really another realm and another, shall we say, skill set to be following all the miners.
Yeah, I love that about you, actually. That if you don't have any pertinent information, then you say so. That's why I don't ask you about silver anymore either, because I know that's not an area you follow. But an area that you do have a ton of experience in is the oil sector. You put a massive short position on crude in 1985 that paid off big time as just one example. So I'd love to get your take on the oil markets today as we sit here. I believe we're around $58 WTI crude. A lot of people saying this is far too low of a price. The price has to go higher. I speak to other people who say it's going to $25, $30 a barrel. We're going to see a worldwide recession, and that's going to cause oil prices to plunge further. I wonder what your current thoughts are on oil.
Well, again, the one thing I'm kind of a plain vanilla guy. That's why gold. I'm just looking at gold. I'm not looking at things that are related to gold, like gold mining. And with regard to oil, it's also that trade in 1985-86 was based on a plain vanilla kind of supply and demand model for OPEC for crude, and I anticipated that OPEC would collapse, and I was the first one to actually predict that oil would go below $10 a barrel, which it did briefly, by the way. It actually did happen. So that was then. Now, again, with this basic supply and demand, you look at the expectation for demand growth this year, and demand growth can all of that increment in demand can be supplied and is being supplied by non-OPEC producers. So where does that leave you? Well, it leaves me with a bearish bias.
Timing is everything in this business. We've seen commodity prices really move up. The copper price, that started to move up strongly. We're not far off all-time highs, although you wouldn't know it from the junior sector and copper companies in general. But I think over the next year or two, we're going to see that really correct to the upside, and you're going to see a lot of money come into the sector. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
And do you think we will see a time when that will turn around? For example, if prices do get to that $30 or lower WTI crude, do you think that's a realistic target to the downside? And do you think we would then see a reversal? Because at some point, obviously, it becomes uneconomic for these producers to extract oil at too low of a price. And then very often with commodities, we see a reversal to the upside, an upswing that goes beyond the required cost of production and much higher. So if we're taking a 5+ year outlook of the oil market, do you have any thoughts there?
Not really. And this sounds like, almost like a contradiction. I say, well, a secular bull will peak out at $6,000 an ounce. Well, usually I don't say those kinds of things, but everybody knowing that I was long gold and a gold bull was saying, well, where's it going? Where's it going? And my usual response is, and it will be the response to this thing on oil, is if you're trading, it's the direction of things that count. It isn't where the peak is going to. Waiting around for that magical peak that you think is going to occur. It's what's happening right over the horizon. Is it going up or is it going down? So my frame of reference is much shorter in terms of trading. And I think oil, as I say, I have a bias on the downside, but whether it's going to $30 a barrel or not, I don't have a clue. Under that scenario, you know what's going to happen is you more or less walked everybody through it. If it went down to $30 a barrel, the non-OPEC producers and the marginal producers would be cut out. It wouldn't be profitable, and we'd have a reversal.
And any other areas of the commodities market outside of gold at present that you think potentially present an attractive value proposition?
Well, a lot of the exotic things, I think, I think lithium is probably bottomed out after completely crashing, and is going. It's good. It is stabilized and going up because exactly what you said. The thing crashes, it loses 80% of its value in a year, which is unbelievable. Well, there are a lot of marginal producers or projects that were on the drawing boards that just are never going to take place. So that's one. Vanadium would be in the same category. It's stabilized and going up, but I'm in the middle of an interview. So at any rate, on a bias side, and it's already had a big run, but cattle.
You're seeing opportunity in cattle, anything else in the agriculture sector? Any thoughts on potash or phosphate, the fertilizer side?
On the upside, it's going up.
I want to talk about emerging markets for a moment because we're going to go back in your history again here. You were president of the world's best performing fund in 1995, Toronto Trust Argentina, which was an emerging market fund. Are you watching emerging markets right now? Do you think we are entering another upcycle? If so, are there any countries in particular that you think could perform well up ahead?
How about Thailand?
Interesting.
Good. Thailand. Remember that going back historically, that's where the Asian financial crisis began in July of 1997. So, but the currency's been stable. The monetary policy is very sound. They're keeping the quantity of money growing in a zone where it should be, and they have don't have it at my fingertips right now, but essentially they're hitting their inflation target. They have no inflation problem. They have good monetary management, and that one looks fine. Of course, a bigger one is I think India. The IPOs are roaring away in India, and even in the face of Trump's tariff threats and everything, I think India is, it's it is still an emerging market. I think, right?
Yeah. No, I agree with you there. You brought up the tariffs, so I have to pull on that thread. Obviously, we've seen this tariff policy out of the Trump administration for some time now. I think a lot of people look at it in a way that it doesn't make a lot of sense and will cause more harm to American consumers and the American economy than it will be to these countries that are being tariffed. We obviously saw Trump propose an additional 100% tariff on China, which caused the market to crash briefly before recovering after he said, no, no, I'm not going to do that. I wonder if he was watching that data, and that was one of the factors that caused him to reverse course. What do you make of this whole tariff policy coming out of the Trump administration? Is this a good thing or bad thing for America, and what could the overall implications be for the global economy?
Well, it's bad. First, it's bad for Americans because the tariffs are nothing more than a sales tax that's imposed on Americans. I mean, when imports come into the customs office, who pays the tariff? Americans do. So so that's bad. That's bad for Americans, and overall, it's very bad for international trade, and just the general thing. If international trade is occurring, there we have something economists call gains from trade. It's obvious if you're trading something and the seller and the buyer both have to be benefiting, otherwise there'd be no transaction taking place. And so what you're doing is with a tariff, you're putting a tax wedge in there and sucking out some of those gains from trade. And what happens at the margin, the marginal players drop out because the tariff sucks all the profit they were making out, or the gains from trade out of the transaction. And so some of the transactions drop out. And that's exactly what, if you look at the World Economic Outlook from the IMF that came out on the 14th of October, you can see this because they're downgrading the growth estimates going forward. So it's slowing everything down. It's sand in the gears basically, and it's just bad.
And what do you make
there's
of the
nothing I can say that's positive about it, and it creates a great many enemies. Looking at it geopolitically, China, for example, now what do you have? Well, Trump's basically at war, commercial war with China, and what do the Chinese do? Well, you get a rally around the flag effect happening, and so actually the Chinese nationalist sentiment increases, the support of the Communist Party, the support of Xi, all increase as a result of this. And by the way, I think Trump is backing off mainly because somebody whispered in his ear and told him that, with the critical materials and the rare earth position and that China has, they could basically shut the West down. And I think 6 to 9 months, China could basically shut the West down, because all these magnets and rare earth supply chain components that are in the high-tech fields are dependent on China.
That was actually going to be.
And by the way, the
yeah.
Chinese are also in their counterattack. So the Chinese don't just sit on their hands. They get attacked first by the United States, and then what do? They say, well, we're not going to buy any soybeans from the United States. Soybeans are the biggest agricultural export in the United States. All of the Midwestern states produce a lot of soybeans, including my home state of Iowa. And those farmers tend to be supporters of Trump. So he's undermining his base by doing this. And he has one bad policy. He threatens China. China counters attacks, makes a counterattack, not buying soybeans. And now Trump is forced, he's going to have to bail out the soybean farmers. So all this revenue coming in, this tariff revenue, is being eaten away with, because he has to subsidize and bail out all the parties that are being damaged because of the tariffs. The tariffs have a tremendous amount of blowback effect, negative blowback effect. Not only are they a sales tax on Americans, but also in this soybean case, you can see the soybean farmers are subject to counterattack now by China. And where is China getting? They're getting their soybeans from where? Argentina, and to some extent Brazil.
Well, pivoting to Argentina for a moment, what do you make of the economic situation there at present, and the US attempting to bail them out with a $20 billion currency swap deal? Because I thought Milei was supposed to be the economic savior of Argentina. He was going to turn the country around, and here we are. How did we find ourselves here, and why is the US getting involved at all, in your view?
First of all, the Achilles heel of Milei, and I said this from the get-go, and I do know a little bit about it, because Toronto Trust Argentina, you indicated was a fund we had in Buenos Aires, and it was the world's best performing fund in 1995, and from 89 until 99, I advised President Menem, so I know that, shall we say, the territory a little bit, and I have always had the position, written many things about it, that the Achilles heel for Milei would be the peso, and I thought he would solve that Achilles heel problem by following through on his campaign promise to mothball the peso and the Banco Central and put them in a museum and replace the peso with the US dollar, dollarize Argentina. That's what he said he was going to do. Well, he didn't do it. And one reason he didn't do it, by the way, is the fact that the IMF told him not to do it. And he's the biggest debtor to the IMF, number one, 4 times higher than the greater, I should say, than the second place country is Ukraine. So the one who owes the IMF the most is Argentina. Number 2 is Ukraine, and Argentina is way above Ukraine, 4 times higher. So the IMF, stupidly, in my view, said, we want you to put in a regular IMF program, slowly take off the capital controls and let the peso trade within a band. Well, now, of course, it's at the high end of the band, and in trouble. And the U.S., I think, made a big mistake by announcing the swap. Because why? From 1995 until the end of last year, I've calculated 75% of the debt incurred. That money comes in the front door but 75% of it goes out the back door in capital flight. So not virtually only 25% even stays in Argentina. It's just a loser's game. And the peso is an endemic problem. The peso, we had a hyperinflation in 1989, 1990 in Argentina with the peso. That means that the inflation rate was over 50% per month. So we had that. They've had many banking crises, many currency crises. They've defaulted on their international debt. They've defaulted on their domestic debt, all related to the peso. No one wants to be in the peso. They don't trust the peso, and for good reason. So it's a pretty simple game. It is the peso. And until you get rid of it, you're going to have one, banking crisis, inflation problems, currency problems, economic volatility and recessions, increased poverty, all of those things. It's all the peso.
Well, bringing things together and looking at the global picture right now, there seems to be economic issues in many areas of the world. We're seeing Paris, France in big trouble, I should say, particularly with the prime minister changing every few weeks at this point in time, in addition to the debt issues they face. The UK is in much of the same situation. Germany, obviously, deindustrializing, economy in tatters. Meanwhile, the EU is talking about ramping up military spending and we're going to go to war with Russia, all this fear mongering. Completely insane to me. The US facing issues, Canada facing issues. I mean, it feels like there's nowhere that you can look where governments and countries aren't facing massive debt. What's the solution to all of this? And how much in jeopardy do you feel the global economy is at present? And I know there's a lot of questions in one. Is gold the final solution? Because a lot of people, you talk about dollarizing a lot of these different currencies, which you have a ton of experience in and which has been successful in many cases. And as you point out with Argentina, that's a direction they should go in. But ultimately, do you think gold needs to play a role? Obviously, the BRICS are already starting to talk about this and starting to potentially implement it. Do you think gold is the solution, and just your overall thoughts on the state of the global economy here?
Well, okay, okay, you summarized a lot of things, and all of them are reasons why gold is in a secular bull market. That's why it's going up, and silver, by the way, you did indicate that I don't pay too much attention to it. It turns out I paid more attention to it than I did when I was talking to you the first time, because one of my old pals from Iowa called me the other day, about 2 weeks ago. I think he called me when it went over $50 an ounce, and said, "Should I liquidate?" And I said, "Liquidate what?" Well, he's got bullion, he's got coins, he's got all kinds of things. No contracts, by the way. It's all physical. And I said, I'll look into it a little bit. I did, and I told him to relax and hang on. So you got silver and gold in the same thing due to all of these things that you rattled off. So that's one thing, trading. Now the other thing about gold is how it would be used in the financial system. That's a different thing than trading or speculating or investing in gold. It's what role gold might play in the international financial system. And one of my mentors, Nobel laureate Robert Mundell, who was, among other things, the father of the euro, so a great guy. Mundell said gold has always played and will always play some role in the international financial system. That was his conclusion. Now the question is, well, what role? That's what you brought up, and BRICS has talked about gold, and the way to do this would be a currency board arrangement in which you issued a gold-backed currency. That gold-backed currency traded at a fixed rate with gold, and it was backed 100% with gold bullion reserves. That's what they should do. And I've written about this, by the way, numerous articles, including one in the National Review that has actually a draft currency board law for a gold-backed currency board. So it's all laid out, very, very straightforward. But BRICS tends to be a little bit more of a talking shop than a doing shop. So we'll see. When I brought this up, by the way, the first time, the article was I was talking about Iran, Turkey, and Russia in the article, and I said what they should do is, in all cases, go to a gold-backed currency. So you'd have a gold-backed lira in Turkey, you'd have the rial in Iran, and gold-backed ruble in Russia, and apparently that was discussed. My moles tell me that a meeting occurred with the Turks, the Iranians, and Russians in Moscow, and it was discussed, and nothing ever happened.
Very interesting. So, do you think this, I guess to tie it all together in terms of the potential for gold to be used in the global financial system, everybody would need to be on board, right? Is this a situation where you could get a certain group of countries, let's say the BRICS, and once they decide we're going to go this route and back our currencies with gold, would that turn into a game theory situation where then the US would have to follow suit eventually? What are your thoughts there?
Well, not no. You don't even have to have a group of countries. You got to have one. What if Turkey decided they wanted to fix the lira for good and issue the lira that was gold backed via a currency board arrangement? So they do it, and it would work well. And what would happen? You'd have a demonstration effect. Other countries that are having trouble with their currencies or their fiscal situations might consider copying it. I think it would work very well. And if that's true, and it did, there'd be copycats.
Well, Steve, this has been a fantastic conversation as always. Tell us about the gold sentiment report and anywhere else you'd like to direct people online.
Well, yeah, we did talk about the Hanke gold sentiment score, and if they go to they can find out all about that by going to thegoldsentimentreport.com, thegoldsentimentreport.com. So that takes care of that. As far as following me, the best place is on X. It's just at Steve_Hanke. And if they want to take a peek at my two most recent books, which you maybe can put up on your site. One of them is now a little over a year old. It's called Capital Interest in Waiting. Palgrave Macmillan published that, and I co-authored it with the great Leland Yeager. The other book I co-authored with Matt Sakurki just came out in May. Wiley published that, and it's called Making Money Work. So one is on capital theory, one is on money and banking. They're both very interrelated. I mean, shall we say complementary?
Great. Well, I'm going to put links to all of that below your books, your X account, and of course, the Gold Sentiment Report for people who want to check that out. Thank you once again, Steve, for coming on the show.
Thank you, Jesse. Great to be with you.